My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends. I'm just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Who's afraid of the big, bad, inverted yield curve now? After today's magnificent run, with the Dow tacking on 250 points, the S&P gaining 1.21%, and the NASDAQ pole vaulting 1.35%.
House of pleasure.
On top of Friday's terrific rally. Maybe we shouldn't lend so much credence the next time some abstruse indicator flashes red. The moment the yield curve inverted, when 10-year treasuries were suddenly giving you a worse return than 2-year treasuries, countless experts came on the air to tell you that a recession is inevitable and you should be afraid. Be very afraid. That's no way to make decisions about your money. I explained over and over again, you get a much better read on the economy by listening to the conference calls of individual large companies. And those calls told me that the consumer's alive and well. Now look what happened. The yield curve uninverts on Friday. So if you took your cue from the panicking pundits and sold everything, sell, you got burned. That's the problem with monomaniacally following the big picture data, the so-called macro that I hear everybody yapping about all the time. Sure, maybe an inverted yield curve means the recession's right around the corner, but tell that to the tens of millions of people who shop at Walmart every single week. Hey, President gave Walmart a shout-out. Think he's been to one? Tell it to the UPS carrier who has to deliver hundreds of Amazon boxes every day. Tell it to the geeks at Visa and MasterCard who count the number of transactions processed each day. Or the bean counters at Apple, where the service revenue stream keeps growing by leaps and bounds, although the negative analysts won't recognize it. None of those companies are seeing a sign of an imminent slowdown. Look, I get why people are worried about a possible recession, and I'm pretty sure we haven't seen the last of these inversions. Our bond yields are much higher than what you can get in Europe. So foreign money should and will keep pouring into U.S. treasuries. If the Germans don't do something to stimulate their economy and therefore save their banks, and the Chinese remain ineffectual in their attempts to offset the impact of the tariffs, we could see yet another inverted yield curve fueled sell-off, and all those negative people will come on air again and tell you, I told you so. They bore me. But let's dig into what triggered this rally, which crucially, by the way, began before the inversion ended. First, you always hear people yapping that corporate earnings will be disappointing. I heard it's like, oh, they're going to be disappointed. They're going to be up 6 instead of 7. They're going to be up 8. 9. Who are these people? Who would say that? Yeah, you know, and the Niners are going to be 12 and 6. I mean, come on. Because of some top-down macro data, these guys arrive at conclusions that I think are, let's say, fatuous. You need to take the whole analysis with a carton of salt. Some of the earnings have been pretty darn good, people. I look at that beautiful Walmart quarter with 2.8% same-store sales growth, much better than expected, and I feel pretty confident. Sometimes I feel more confident than Doug McMillon, who's always quite silent about things. Maybe he ought to speak up a little more about how well he's doing. I guess Walmart shoppers didn't get the memo about the 10s and the 2s. They are taking their financing money, the refinancing money that you get because the refis are so low, and use it to decorating their houses. They're renovating like mad. They're buying new homes. Second, semiconductors investors, they've been betting. The investors have been betting on a turnaround, but they gave up on the group. 10 days ago, they gave up on the group. And that was based on worries about a cell phone slowdown and a decision by the Chinese to buy local, both of which may even be true. Therefore, the semis were all supposed to be roadkill. Well, it looks like no one told NVIDIA, which reported a monster earnings beat last week, that it was supposed to be roadkill. What's driving the strength there? Look, do you remember when we visited NVIDIA, one of my favorite times that ever since I've done the show? We visited them. We saw the future, a graphics processor that would make video games look far more lifelike. The technology is called ray tracing, and it's just starting to kick in. We saw chips to simulate self-driving cars, something that needs to happen if Lyft and Uber are ever going to make money, though I have to tell you, the Lyft stock acts pretty well today, given the fact that the lockup expired. We learned that Volvo is actively engaged with them. Uber uses Volvos. We learned that when we went to the Uber factory floor. We saw NVIDIA's data center chips, and we're told that while there was a pause in spending, it would end soon. Apparently it has. Finally, we saw chips that were learning to make inferences, no longer taking our language literally. This I love. For instance, when you say, oh, go jump in a lake, well, your computer goes to Google Maps and looks up the nearest body of water. But a computer powered by NVIDIA's new inference technology would know that you're just angry. Yep, conversational artificial intelligence is coming. Everything that moves will be autonomous. Every major industry is incorporating AI, from healthcare to finance to manufacturing to transportation. These are secular trends, and they won't be stopped. Even if Fed Chief Jay Powell makes a disturbing speech from Jackson Hole this Friday, he should just go fishing. The blowout NVIDIA numbers were reminiscent of the old days. I wax positively over those old days. Remember, those were the days when my dog Everest got renamed NVIDIA and now answers to that name, provided you have a fistful of roast beef. Or CBD gummies. Hey, listen, he's got arthritis. What can I do? Regular viewers know I'm a huge believer in NVIDIA, the company, and its CEO, Jensen Huang. But I had no idea the stock would have enough pin action to move the entire group of semiconductors. The roar of Texas Instruments, AMD, NXP Semi, Broadcom, so many others drowned out the drumbeat of the 30-year running amok. No one told Jensen that his products were dead unless the Fed aggressively cut rates multiple times to stave off a recession. Perhaps the demand is there regardless. Oh, then there's Apple. We got a bunch of notes last week. Yeah, kind of somewhat positive. Apple sales, they may be steady and maybe okay and above plan even in China. We learned that the service revenue stream continues to be a standout. But the most important thing we gleaned in the last 72 hours, Tim Cook spoke to President Trump about how Apple, which is a cell phone company, would be disadvantaged versus Samsung if its phones got hit with this latest tariff. This may sound pretty obvious, but believe me, there was no sense that the White House cared about this until Cook sat down with the president. The party line had been that if Apple wants to do so much business in China, they can face the consequences. Judging by the president's positive tone about the meeting, maybe it'll be more accommodating going forward. Maybe give him a break. Finally, if you needed one more wake-up call that the inverted yield curve isn't all that important, that it isn't the be-all, it isn't all we should focus on, well, then you had to go, oh, my God, this was like a great Broadway show, and I usually fall asleep on Broadway. You had to listen to Estee Lauder's conference call. Fabrizio Freda, genius. The cosmetic kingpin reported a spectacular set of numbers. We know that Estee Lauder has a terrific mosaic of worldwide businesses. U.S. segment actually a little bit weaker than others. Still, China was on fire. Still, the e-commerce purchases were incredibly strong, and the stock leaped 22 points in response. Is this Tom Ford stuff that good? I guess so. I don't go to that counter. I don't know about you, but what the heck were people thinking using premium makeup with an inverted yield curve? How dare they? How could sales of Clinique be so strong with that 10-2 crossover? How could anyone justify buying MAC when the Germans were arbitraging buns? Well, when you put it that way, it does sound ridiculous, does it? Because it is, even though I've heard it for months. Max, that's a MAC. My wife has a lot of it. She has like a whole wall of it. What is it? I don't know. It's something that costs money. The bottom line, this rebound can easily be undone if the bond market turns us around, stopping traders in their tracks, but not commerce. The recession talk hasn't vanished, even if it's now buried under a mountain of bullish data points. But on days like today, it sure is hard to find. Hey, why don't we go to John in Kentucky, please? John!
Booyah, Jim.
Booyah back!
My grandson. Oh, okay. Yeah, great.
You're welcome.
My grandson and he has a little education portfolio that I've got for him for his college. He's 9. Kellerman's 9. And we recently bought some Disney about a couple months ago, and it's down about 5%. But Kellerman wants to buy more, and I kind of agreed, but we wanted to get your opinion on it. And then we heard today
your kid's got
some news on the
horse
stock
sense.
about a whistleblower.
Your kid's got horse sense, a whistleblower. A whistleblower. It's like the clown who tried to knock down GE last week. What is it, fun and games to knock stocks down? I mean, look, I'm sure the whistleblower, I'm sure there's gravitas, I'm sure it's germane, I'm sure it's pertinent. I am with Bob Iger. Call me crazy. I'm banking with Iger. I'd say your grandson's right. Bye. Hey, how about we go to Pedro in Florida, please, Pedro?
Booyah, Ski Daddy.
Yo.
I'm a big fan and second-time caller. Listen, I'm in the house of pain with my stock VMware after the news regarding the acquisition.
Yeah.
With them set to report earnings this week, should I buy more, hold, or sell?
I can't say I was that happy with the Pivotal, the news about the Pivotal deal. I think VMware can bring out good earnings, certainly better than last quarter. I think that they underpromised last quarter, so this time they will overdeliver. So I'm going to say that a bottom is nigh. How about we go to Harry in Pennsylvania, please? Harry.
Hey, this is Harry from Newport, Pennsylvania, Jim. First, I wanted to say I bought all of your books, and I'm absolutely loving Confessions of a Street Addict.
You're too
Can't
nice.
put the book down.
You're too nice.
I want to also say my girlfriend started investing. She loves your show. I bought a Royal Dutch Shell last week, and I bought it more or less as a value play. And I was wondering what your thoughts were on the oil sector, not just Royal Dutch Shell itself, but the oil sector, and it's just been beaten up.
I have soured on the fossil fuels. I think that there's long-term real issues there. Even the best won't go up. And I have to tell you, Royal Dutch, for instance, is not as good as BP. And if BP cannot get out of its own way, if you want a cautionary tale, try looking at Whiting or even worse, Concho. In other words, stay away. All right, please don't get me wrong. I don't think we've heard the end of the recession talk because there's a lot of people, it's like a cottage industry. They can't stop yapping about it. But boy, oh boy, the mountain of bullish anecdotal evidence is hard to ignore, isn't it? Oh, man, Money tonight. Feel like the fun police have invaded this market recently? I'm eyeing Six Flags versus Cedar Fair to see which play could put the recent roller coaster action to good use. Then, it's one of the hottest groups in the market, but it's been flying under the radar screen of late. I'll reveal it in tonight's Off the Charts. But first, despite the slowing economy here in the U.S., the consumer, it remains strong. I'm taking a look at where they're spending, what they're buying, and the companies that you need to buy shares in. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.